Hey, this is Jeff Brooks with Remax of Orange Beach and the Gotti team for your monthly market update for Baldwin County residential and resort properties with data through the month of December 2025. Let's hop right in. Interest rates have come down a tiny bit more, and if you'll remember last year, I was suggesting that it was going to remain in the sixes through the year. Well, all of the information I was getting led that suggestion to be correct. I'm now suggesting that it's going to stay sort of around 6 through the first half of this year. Too early for me to guess what's going to happen later in the year. We'll need a few more economic indicators there. Pricing, residential, Baldwin County is still growing and is still a bargain compared to lots of places in the rest of the world. Resort prices, or I use condos and townhomes there. Prices are off peak. It's been flat for a bit. Will it come down some more? I don't know. Again, we'll need some more economic indicators to see what's happening there. Inventory, residential, still in that healthy 4 to 6 range, but it's starting to come down. If it continues to come down as the selling season, buying season arrives, that could impact pricing again. And then on the resort properties, it's off that peak. It got all the way to 14 months supply. It's come down a bit. Again, we'll need to see a little more to predict much further into the future there. Here's the detailed interest rate slide, and you can see from about a year ago, it was up around 7, and now it's down around 6. If you remember the last time I did this, I did the entire data set from 2012 in this market to show what that steady, healthy market looked like before the pandemic. And through it, and now I've shortened that to 5 years so that we see that anomaly during the pandemic and we see where we are now. And you can see that unit volume is fairly flat. It was 515 in December. You can see there is a cycle to it through the year. If you look at the volume in dollars, the dollar value recovery took a little longer than the unit volume recovery after the anomaly. And that's because it takes all of us a little bit to sort of recognize the shift in the market before we adjust. And median price trend on condos and townhomes, you can see that correction period coming down slightly from the peak around 2023. The wild swings since 2023 are because of the low volume. You get just a few sales at one end or the other of the price spectrum, and it can drive that number significantly up or down. In the single family space, we had that melt up through the pandemic. I talked last month about the trillions of dollars that the government has pumped into the system. And those trillions of dollars, along with the growth in Baldwin County, have landed on home prices. So I believe they've been reset to about this 335 range. For some time to come. I do believe it will start to grow again, sometime in the near future, and again, that's going to depend on other market conditions as we see what happens. I have not updated the total units sold in the top left and right corners of these slides. But you can see that inventory on the condo and townhome, primarily resort area, coming back down to about 10 months supply. That's still a lot of supply. I still think there's a good bit of shadow inventory in that space of people waiting to see what's going to happen before they put their unit up for sale. And then on the right, we've got the residential space, and you can see that reduction from about 5.5 months supply back down to almost 4. If that continues to come down, then I believe prices will start to go up there. And then the price per square foot, which I use to sort of normalize between the different sizes of homes, it doesn't do a great job at sort of fit and finish of the home, but it does give you a decent idea. And you can see here the condos and townhomes have flattened on that price per square foot, just under that 450 number on average. And on the single family homes, you can see it's still seeing a relatively healthy growth rate. We're up at 189. The national average the last time I checked was 225. We are seeing industry growth here. I think that number will continue to go up over time because we have a nice healthy market and we're a desirable place to live. What does this all mean? Sellers in the residential space, price it to sell, but be patient. Still on the market a little bit longer than it was back during that anomaly period. Rentals or resort properties, I'm still saying rent it if you can. If you're making a positive cash flow there, continue to do that. And if you're not making a positive cash flow and you want to sell it, then you have to look at what it's going to be valued at by somebody that might buy it. Where would it be positive for you? And that might be the right price. Buyers, two very different markets. I can't even make a general statement for the total because they're so different right now. With the residential, I've said it a couple of times in this presentation, being a bargain and seeing healthy growth, and the rental or resort or condo and townhome space for the most part, leverage the higher inventory and slightly lower prices. And then let's make an offer that works for you as the buyer and just see how the seller responds. If they don't like that price, then maybe they weren't really ready to sell. That's all I've got for this month. Hope you have a blessed month, and we'll see you soon.